What's up, everybody? Today we will study ICT breaker blocks, and in this part, I will discuss the bearish breaker blocks. Breaker blocks is one of the core ICT concepts, and it gives you at least two trades within a week on a single asset. So, on multiple assets, you can get a trade every single day with about 90% win rate. In this lecture, I will completely decode the breaker blocks by backtesting it, and we will discuss what's the psychology involved in this particular area that makes this move highly probable. And in the end, I will give you a smart money confirmation tool that will make your life much easier. Okay, so let's start from the definition of breaker blocks. What is a breaker block? So, breaker block is an invalidated order block. What is breaker block? Invalidated order block. We will explain that in a moment. What is an invalidated order block? So, what's the breaker block? It's an invalidated order block and gives move in opposite direction. Gives move in opposite direction. So this is the definition. The definition isn't much importance. The important thing is the concept. And now we will explain how this is an invalidated order block and why it gives a move in opposite direction. So this is the area that we are going to discuss. So I will play the replay of this area and we will discuss what's the psychology that's involved at this area, okay? So if we go back a bit, you can say that here the market structure was shifted to the downside, or the break of structure happened to the downside. Now you can see that this was the last high before forming this low. So this is important. What the ICT traders or other traders do is they mark this area and they wait for a market structure shift to get bullish. And you can see we got a market structure shift to the upside. Now as ICT trader, I will wait for any order block, a bullish order block to get into my longs. So let's see if we get an order block in this area. Okay, so you can see that the price came down and then we got this order block. Why is this an order block? You see that we got this down closing candles and then the next candle, this green candle, closed above this previous one. So this is a bullish order block. Now, what we usually do is we wait for this fair value gap to get filled, okay? Or sometimes we use the 0.5 fib level of this black candle, okay, for our entries. So this is our entry area for longs because we got a market structure shift and then we got a bullish order block. So now let's see if price comes back into this fair value gap and we will enter into our longs. So you can see that the price enter into this fair value gap. So what I will do is, and what all the expert ICT traders will do is they will long at this area. But you can see that it went down and our stop loss will be here. So this is a losing trade. Okay, our stop loss will be here. But believe me, most of the traders don't use a stop loss and they get trapped at this area. And what they do is they wait for a pump, okay, to recover their losses. Now, some of the stop losses got hit and some don't use the stop loss, so they are trapped. Now, what's the psychology here? So this was the order block. Everyone put their orders here and it got invalidated, like we didn't get a pump from this area. Now, as in the definition, I told you that it gives a move in the opposite direction. So this order block was supposed to give a move in upper direction, okay? And now this will give us a move in the opposite direction. So we will wait for the price to go up into this area, to this order block area. Let's see if the price goes up to this area. You can see the price is now going up, okay? Going up nicely so far. I will increase the speed. So it won't get boring. This was our area. Still, we are waiting for the price to go up into this area. So now you can see that the price went up into this area. So as I told you, this area is supposed to give a move in the opposite direction that the order block was supposed to give us. So the opposite direction is to the downside. So we will enter into our shorts here, and our stop loss will be around this area. So you can target this sell side liquidity. You can target this sell side liquidity. So let's see if we get this move from here. Now you can see that our entries got filled and the price has started going down, and it went to our target. Now, as I told you in the beginning that I will give you a smart money tool for the confirmation. So if you don't want a blind entry at this order block, you can use the tool that is the SMT tool, smart money tool, and the SMT pair of S&P is NAS 100. So you can use these SMT divergences. You can see that this was the high that was made. Let me zoom in. You can see here the high is this one, okay, and it didn't get swept. And below, if you see, the same high was here and it got swept. Okay, you can see the black candle went above it. So you got an SMT divergence too, and this SMT divergence is bearish. Okay, so you were already waiting for this order block to give you a move in the opposite direction, because it has now turned into a breaker block. So that's one confirmation, and the second confirmation is your smart money tool, SMT divergence. So once you see an SMT divergence, you can enter. So that way your entry will be around here and your stop loss will be much tighter if you use your SMT tool. And you can see it gives you a big move. So that's all about the breaker block. It's an invalidated order block and it gives a move in the opposite direction that the order block was supposed to give. And you can use the SMT divergences as a confirmation tool.